Right. Good morning, good afternoon, depending on what time zone you're operating on. My name is Ingrid Silva. I'm a partner at Reed Smith. Reed Smith is a law firm, and that makes me a lawyer, but I'm still a nice person, really. This whole setup is feeling a little bit like one of my kids' toddler birthday parties where there's a crazy level of noise and somehow you're trying to sort of focus on what you're saying and move things forward. And by the end of it, you need a really strong drink. But the good news is this session is leading up to lunch, so we will get a drink by the end of it. And we have a fantastic panel and some really juicy issues to get stuck into. So we're in for a treat. So this session is all about the big blockchain shake-up, not check-up. It's about the fact that digital transactions are under challenge and exploring the role that blockchain can play. The tagline to the session is be part of the evolution or get crushed by the revolution. So we're going to have a presentation by Kate in a moment, and then we have two panelists, Adrian Brink and David Wainwright, who is also joining the panel. They both have really interesting experiences to share in this space. But before we kick off, quick show of hands. Who feels confident that they know exactly what blockchain is? Not so much. Okay, so before we have the presentation, I'm actually going to call on Adrian in a moment to explain to us in very simple terms, and I will cut you off if it gets complicated, what blockchain is. So next show of hands, who's worried about blockchain? No? Who's excited about blockchain? Okay, a bit of excitement, no one's worried. Who has no idea what to think at this point in time? Okay, quite a lot there. All right, so in a moment, I'm going to ask Kate Goldfinch to come up and present. She's going to talk to us about payment systems of the future. Kate's a journalist specializing in this area, but she also does a whole bunch more than that, and I hope she'll share that with us. While she's setting up, Adrian, tell us in very simple terms that we can all understand, what exactly is blockchain?
Blockchain. Good question. Blockchain is a mechanism that enables two parties to transact with one another without knowing each other, with no contractual relationship. So in practical terms, it's a computer mechanism that enables me to do something with you, and I don't know you, you don't know me, and we know that that thing we're doing is going to happen and it's not going to be screwed up. So in simple terms, Bitcoin, which is the first practical implementation of blockchain, enabled me to send you some money. I couldn't send it to you twice and create value from nothing. When you got it, I didn't have it anymore. And that record of that transaction was stored in a computer system in a way that it can't be tampered with or changed forevermore. So it's an immutable record of what happened. In practical terms, the only way to do that without a central party in control is to have very, very many people in control. And so what blockchain is implemented on thousands and thousands of computers owned by many, many thousands of people, and they're all talking to one another and agreeing that this is the state of the nation right now. And they are rewarded for doing that.
So in simple terms,
that was simple terms.
Exactly. I'm just reiterating. The way it works is there's no central repository of information or intermediary, but rather exactly the same information is stored on every, I guess, node or computer in the network.
In order to eliminate one guy who knows what's going on, we all have to know what's going on.
Okay, and that's what the term distributed ledger, which is a term that pops up a lot,
basically
is about.
A glorified accounting system.
Okay, and the special thing about blockchain is, if I understand correctly, is once a transaction has happened and is recorded across every single bit of the system, it can't be changed. It can only be added to.
It can be, and a new transaction can be created, yes, but that's an immutable ledger.
All right.
Forevermore.
Forevermore.
Kind of begs a whole lot of questions like what happens in 20 years' time.
We're going to get onto that. So did that make sense to everyone? Yep. Okay, great. So Kate, over to you. Am I in the way? Do I need to?
Thanks a lot. So it's amazing that we started from those definition, what blockchain is, because I'm at first here with the audience that doesn't know anything about that. But let's speak about quite general problems of existing payment systems, and maybe it will be a bit clearer. Uh, so payment systems of the future and the role of decentralized technologies, so-called blockchain. Let's go back to 1st of June this year. Maybe you also were faced with this problem. So when global payment provider Visa went down and caused a widespread transaction failure across the UK and Europe. And so after the first hour, Visa first statement said the issue was the result of a hardware failure. And 6 hours later, the company released a second statement assuring that the problem has been completely resolved. But so it happened. And so this case is a proof that any alternatives to existing global payment systems are vital to avoid any disaster. So this case raised the question how to build more resilient payment network, sufficiently fault tolerant and possibly decentralized, because all existing payment systems right now are centralized. So let's consider how we communicate right now globally to each other. So we can send at any time any message via any application like Viber, WhatsApp, or any social media networks, and it happens for free online. We just need internet and in real time, and no intermediaries, just the frame of application. So why sending money experience is totally different right now? It's fees, middlemen, time loss, etc. So it's not fair from customer's view. So what do we need right now? We need sending money experience, the same one like the sending SMS, sending social media messages experience. So the same one. It's so-called era of financial internet. It's something happens with phones. Sorry. Um, so. The focus here right now for all parties, all market members, is on user experience, and so removing any frictions from buying processes. So the same for telecom companies. So nowadays we see a lot of shifts in financial industry, so a lot of so-called fintech companies. They're not represented here at this conference, but so they're delivering right now to the market different financial services solutions, just one click, mobile wallets, when you pay via your mobile phone, for example. And so even Amazon Go just launched the project Checkout Free. When you go to any supermarket and you do your shopping, and afterwards go out and without any checkouts, the money are charged from your mobile phone. That's all just piloting right now. And cryptocurrencies as well. It's like from newcomers and new solutions. But we will speak about a bit later. So technology has never been more critical for businesses right now, as it is right now. And to stay relevant to consumer needs, you have to foster innovations, to modernize your business processes and payment processes as well, because it's very important to be compatible in the market. Some figures, 59% of UK consumers right now will leave a business website within just 30 seconds if it's ugly or hard to navigate. In the past 5 years, 24% and 41% among 18 34 aged consumers just switched their loyalty from a regular company to a competitor whose technology like website, application, or any payment system delivered more added values and was better for customer experience. It's according to a research by British company Studio Graphene, and 2,000 people were involved. So payment providers right now, being totally centralized, face significant challenges. Consumers require a new generation of payment services and experience with no fees, immediate and instant transactions, like sending messages via Facebook. Considering that, so big players like MasterCard, Visa, Swift just launched appropriate services and pilots right now. And MasterCard, for example, launched AI Express is a new service that helps company to develop artificial intelligence models. Visa Canada also is experimenting with a startup, FinAI. It's in the area of artificial intelligence and chatbot space. I've been in Visa Innovation Center in Dubai and saw huge focus on biometrics and one click and all payments made from your mobile phones. Swift also introduced a huge project JPI enabling cross-border payments within like seconds, and it's already 200 banks are involved in those systems, fast growing. So financial industry on the cusp of big change right now, and especially from 2008 when Bitcoin blockchain project was released. And you can maybe consider that last 2 years, like up to 1.5 years, a huge hype around blockchain and crypto and something. So it's the sign that society needs any decentralized projects and philosophy. So without those intermediaries and something like that. So just the illustration of that Bitcoin market capitalization increased from 2012 from $40 million to approximately more than $100 billion in the third quarter of 2018. Why Bitcoin and blockchain are so popular right now? So it's clear that all those hype around Bitcoin is like speculation and the opportunity to speculate and to earn money. But Bitcoin is totally decentralized and open to anyone. You can join at any time. It's not controlled. So there are like two formats of blockchain, private and public. So we are speaking right now about public blockchain. It has no single point of failure. So since 2008, the Bitcoin blockchain has operated without significant disasters, like we considered at the first slide with Visa, a payment provider. So Bitcoin blockchain weaknesses, sure, they're here. Transaction processing time and higher fee. And so you can see here that Bitcoin, it allows right now from 4 till 20 transactions per second approximately. Ethereum 200 transactions, Exonum 5,000 transactions, and the speed also. So the transaction can take, so it's sometimes it's much more, but average in Bitcoin system 10-20 minutes, Ethereum 1-3 minutes, Exonum few seconds. So what can be, it's not the ideal situation. So a lot of developers right now working on how to improve the Bitcoin blockchain and all cryptocurrency transactions and to make it faster. So Lightning Network can be a solution, and a lot of developers are working on that right now. So it's quite, it's not easy to understand like a second layer payment protocol or something like that. So imagine that you have your coffee chain and inside a lot of coffee shops, and you do transactions inside of those chain. So it can be dozens or thousands of coffee shops, and the whole day you are trading something, you are selling coffee. And so you see all your transactions inside of your chain. And afterwards, at the end of the day, you do like a compound transaction, which includes all those information from the whole day and from all your transactions. So it's something like that, so-called side chains. So it's different definitions right now, but so it allows to make the speed of transactions much higher, because inside of your chain, all your coffee shops know each other and you trust each other. So you do transactions inside, and just at the end of the day, you add those whole compound transaction with all track records from those numerous transactions inside of the whole system, underlying blockchain. And so in this case, it helps not to interact the whole huge system each time and when the speed is quite low, but to do it like once. So it helps to do it like milliseconds and to reduce fees and something like that. So those problems which is facing right now the whole blockchain system with those speed and time transaction, so it's trying to develop and to solve by such kind of solutions. And in September 2018, the Lightning Network protocol Bitcoin had a total capacity, it's roughly $700,000. And approximately so-called chains inside of the system right now, so-called coffee chains, yeah, it was an example, it's clearer. It's 1,200 channels like that inside of this protocol right now, so it's quite growing system. Just to make it on any real cases, so the Spanish hardware hacker developed vending machines accepting Bitcoin transactions via those protocol, and you can buy your Coke, for example, via this machine using Lightning Network protocol. So it's closer and closer to real life right now. And also a big processor, payment processor, CoinGate, that includes in the system like more than 4,000 merchants. Right now also allowing to accept payments made through the Lightning Network. So they're piloting right now this system. It's just 100 merchants are involved, and a bit later they will allow to all those ecosystems to be involved. So just first steps. And also interesting fact that there are globally some core teams developing those protocols. They just raised huge funds and will improve the whole system. So it will go faster, I would say. So what to expect that solutions like Lightning Network will become mainstream and everything will help the blockchain to become mass adopted, will be mainstream. So Bitcoin adoption as well for like mass market payments, it will be a trend. And sure, finding a broad range of applications through different markets, like for telecom companies. So different markets right now are piloting different projects with blockchain just to find out a real case solution. So it will be more and more industries involved in this problem. And telecom as well, I do believe. And so just the idea of paying for goods and services using cryptocurrency is it's starting to enter the public. And so interesting research that in Germany, it's Statista website, and they made those research that in Germany, more than 11% of customers would use cryptocurrency payments. 40% Americans would do also transactions and purchases with Bitcoin and cryptocurrencies. In Europe, around 9% of people also would be like supposed it's the future of spending online. And retail is also involving more and more in those systems. And right now in South Korea, the core retailer just started to accept 12 cryptocurrencies. In Japan also, telecom companies are investing in different blockchain projects, and retailers are also involved and allowed to make transactions with cryptocurrencies. So a number of countries right now are involved in that and so allowed to make payments with cryptocurrencies. So I do believe that those e-commerce and crypto commerce will become those gateway to Bitcoin and cryptocurrency usage in real life. Thank you so much. I suppose you will have like a bit more knowledge on that, what is happening right now, how it can be used in real life. So it's really lots of problems right now, but so no like general solution, but a lot of experiments around. But definitely decentralized philosophy is very interesting to be accepted for the new payment world. Thanks a lot.
Thank you, Kate. That's fantastic. So that's a really fascinating overview of. Can I get
better for me? Yeah.
Of where blockchain and distributed ledger technology fits into payment systems, but it also sort of segued very nicely into, I guess.
I will do the whole disrupt.
Yeah, we're just going to have a bit of furniture moving around here before we kick off. That was a really interesting segue into how blockchain and distributed ledger technology is not just about payment systems, but all sorts of applications around that. So what I'd like to just spend a few minutes doing is exploring the sort of wider ecosystem, if you like, by getting David and Adrian to introduce themselves and share a little bit with us about their experience of blockchain and its application. So, David, can we start with you?
Sure, yeah. Hi, everybody.
Microphone over here.
So my experience with blockchain is that I've been kind of in the interactive space for about 10 years. I've done interactive television, interactive web, mobile games, app games, gambling games, etc. And for me, what I kind of saw with the blockchain, Bitcoin, cryptocurrency is it's kind of a new world of kind of unstoppable code in that in the gambling space, you often get told to take things down, governments can block them, whereas on a blockchain, with certain networks, you can deploy code globally and it's kind of unstoppable. So nobody can ask you to take it down. They can maybe put a gun to your head and say, take this down, but you could have a reasonable reason and they may never know who you are. So you could deploy this code anonymously. People can play this game, gambling game, globally, send money to each other, and nobody would know who owns this code, who's deployed this code, who can stop this code. So for me, I saw that as like an amazing opportunity for the future to deploy applications, take payments totally anonymously. Of course, it's created a lot of issues and a lot of problems that kind of governments don't like anonymous money transferring from one country to another country. Governments have successfully stopped people transferring money from one country to another country. But once your kind of money is in the crypto ecosystem, they can't stop it. They can stop the on-ramp and the off-ramp. So for me, that's the really exciting thing, is we can deploy apps, code globally, bill people globally, and governments can't stop it in any way.
Thank you. So I want to come back to that idea in a moment of it being unstoppable and anonymous and all of that. But before we do that, Adrian, tell us a bit about your world.
Yeah, so my background's gambling, online gambling. I started an online gambling site in 1995. It was the first online gambling site actually, and I've been in the space for 23 years. I love gambling. I love the infrastructure around it, the payment processing, the big part of gambling, of course. And that in those days, 95, 96, the internet was relatively new. People were coming to grips with this new thing called the World Wide Web. And it was kind of like the Wild West. It was great fun, actually. There's very little regulation. You could do what you liked, and everyone did. In a way, this crypto space feels like that now. The crypto space for me now is what online gambling was in 96, 97, which means it's great fun. It's a tremendous opportunity for innovation and to make a lot of money as well. So my foray into crypto is to introduce sports betting on crypto. We built a system over the past year or so. Did an ICO in January and raised $5.5 million, which we're using now to roll out Better Betting, which is a crypto-based sports book. It's a sports book without a sports book. You can basically place a bet, it sits on a blockchain, results in a blockchain, and there's no one in the middle holding your money and deciding what happens to it. There's no party, no central party at all. And that's live right now.
Okay, thank you.
And it's really cool.
It's really cool. That's your big takeaway from this. Okay, so each of you, quite interestingly, have said something in the context of blockchain, which is similar. So, Kate, you said it cannot be controlled. David, you said something along quite similar, I think.
The code can't be terminated.
Yeah, can't be terminated. And Adrian, you said it's the Wild West. So I wonder, I mean, is that really true? And the reason I'm saying that is because it's this kind of big, new, unknown technology thing that can grow very fast, which is a lot like the internet was. But if we look at the sort of tech giants of today, so the Facebooks and the Googles, Google Plus, I think, just got shut down today over hacking issues. Facebook is facing fines. We are seeing regulation slowly eat at these tech giants. So I just wonder if that's really true, or if it's just that this is something that's at its infancy although the numbers are quite big that are being bandied around and the take-up does seem significant. Is it true that this isn't going to be regulated at all?
I didn't say it wouldn't be regulated.
Okay.
It's extremely hard to regulate that.
Okay, it's difficult to regulate.
Well, it's now impossible. I mean, you can regulate the points where it touches the world. So you can regulate the exchanges, for example, where you convert fiat money into crypto. You can regulate that, and that is being regulated right now. But actually, to regulate a smart contract on Ethereum, it's impossible. Once it's released, it's unchangeable. Even I, as the creator of the smart contract, can't change it. It's just there. Right. If I want to change my betting contracts, I have to release new ones, but the old ones are still there. You can still use the old ones if you know how to, and they never can be changed. It's an immutable record.
So the immutability is...
Well, yeah, which poses, I suppose, a risk to regulators.
Okay, but in a way, regulators like immutability and certainty, so
they
perhaps
don't
this
like
is
not being able to stop things.
They don't like being able to stop things. Okay.
Bitcoin, there is nobody to fine. Who would the regulator fine if they don't like Bitcoin?
Okay.
Who would they fine?
Well, we have seen people go to jail in the US for their financial activities.
Yeah, that's the exchange. That's the people that are touching the world.
So it's the touch point with the world that remains regulated, but it's what happens in the middle there, the system and the lack of intermediary, which is where we have this sort of black hole of invisibility, if you like.
Not a black hole.
Not a black hole. Okay, it's a good thing. Not a black hole. Nothing disappears. Okay, so blockchain, I've seen it described, and we hear it in lots of different ways, as anonymous but not private. So can we talk about that concept a bit, because it's quite a sort of complex notion if you sort of drill down into what that means. So on the one hand, you have anonymity but no privacy whatsoever. How does that work? Kate, maybe you have some thoughts on this.
I would say that Bitcoin blockchain is pseudo-anonymous, so you can track...
Sorry, I didn't catch that.
Sorry, it's fine, yeah. So Bitcoin blockchain is pseudo-anonymous, so you can track particular transactions on the chain. And so right now is the reason that appearing different other cryptocurrencies solving this problem, which is much more anonymous right now. So it's absolutely different approaches and philosophies. Is the reason that different cryptocurrencies has different features. More anonymous, less anonymous, more speed, less speed, but they solve particular problems and so.
Yes, there's a whole,
how do you react to that?
There's a whole agency springing up now that are trying to track down the ownership of a wallet. So if money gets stolen,
ownership of the,
a Bitcoin or Ethereum wallet is just a number. And yeah, if I send money to Adrian and he gives me his wallet, I can type in his wallet and see what he's purchased. I can't quite see what he's purchased, but I can see where his money's gone. So it wouldn't take difficult for somebody to track down who Adrian is, because they could basically, you just need to find one person on the chain and start building your tree of where the money's gone, et cetera, et cetera. So although it's not anonymous, it's slightly anonymous, but you can quite easily track down who that wallet belongs to. And there are sophisticated US government agencies that I'm sure are building databases of who owns which wallet. Because there's been recent hacks and Bitcoin stolen, and they track it down. They track down who owned these Bitcoins.
Okay, so that's interesting. So I guess when we think of cryptocurrencies and particularly...
I'm just bringing this up because I don't know how many people here actually know what this stuff actually looks like. So I just thought I'd bring up, this is my currency, Better Betting, and you can see here, if I can figure out how to scroll. How do you scroll this thing? Yeah. You can see every single transaction here. So that's 2 hours ago someone did that. And you can actually go look, if I can figure out how to work his laptop, and what happened there.
So this is someone's transaction, but we don't know who.
You don't know who it is.
Okay.
But you can see what they did. If you understand all this gobbledygook. But basically, it's all open, but the endpoints are anonymous, unless you happen to know who they are.
Okay, so this is very interesting because we often associate sort of cryptocurrencies and so on with this possibility of anonymity, and therefore it's the realm of sort of criminal activity and so on because it's not traceable. what we're seeing here is we can see exactly what people are doing. And what David has just said is that actually, if you want to, or if you can get hold of, I guess, the key, the private key or the wallet, or you start piecing together a picture of transactions.
It's not the key. You just need to know one person in the chain.
Okay.
And ask him, who did you send that money to?
I see. And you can start building out a picture of who participants are. So are we saying that this perception of anonymity is in fact a bit of a myth?
No. No, I don't think we are saying that.
I think it's a myth. Personally, I think it's a myth.
Okay, so one person thinks anonymity is a myth, one person thinks it's not.
Well, you must also bear in mind that we're talking here about Ethereum and Bitcoin, but if you really want to be anonymous, you'll use Monero, which is designed to be anonymous. And there you can't even see the transactions. So
I see. So you can't always see the transactions, and you don't necessarily know the total transfer.
So basically, the drug dealers all got to Monero now.
Okay, so the answer really is there's blockchain and there's a spectrum of levels of visibility and anonymity if we want to sort of paint a true picture here. Okay, so let's go back to our starting point when we were sort of defining blockchain. And we talked about this distributed ledger and the fact that no one could really control things. And in a way, this creates a protection or a resilience. And Kate, this was sort of your starting point because you started with the Visa crash.
Yes, absolutely.
And why there was a need for resilience and so on. So in theory, and I guess David, you touched on this as well, no one controls this thing, and therefore it's safer and more resilient and authentic and so on. But if that's true, and is it true, is one of the questions, that no one controls it, is it really as safe and resilient as we think, or what sorts of things could go wrong with this? Can we talk about that for a moment?
I don't actually entirely agree with that analogy of Visa, because
What's that?
I don't actually agree that blockchain is going to fix Visa sort of thing, because fundamentally there's many ways to make resilient computer systems. I mean, they had a problem that happens. I don't think that's the core thing in blockchain. The big thing for me is that there's no one in the middle, no one in charge.
No one in charge. But is that really true that no one can ever be in charge in a blockchain environment?
So long as there's sufficient miners. So long as there's enough people mining it, that you can't gain control of the mining.
Okay, so in theory, you could get in control.
This
is important, and this is an interesting area to explore, because we have this perception that it can't be controlled, and that's what makes people uncomfortable, that's what makes regulators uncomfortable. But actually, there is, in theory, a possibility for...
It is possible.
Let's talk about that.
I mean, it happened on a few of the blockchains where hackers found a way to control 51% of the mining for a period of time. And in that period of time, they were able to issue double coins and so on. But in a network like Ethereum or Bitcoin, where there's so many miners, it's extremely difficult to do.
So we just need to explain that term. So a miner, if I understand correctly, is a computer that is part of the network and stores the information and sends it on and does all that sort of stuff. And you're saying that once 51% of miners are controlled by a particular entity, actually that entity can control
theoretically, yes,
the blockchain network. And we have a question over here. Tim, no, go for it. Do we have a microphone? No? I might have to repeat your question. Okay, shout and I'll repeat it. Microphone over here.
Can you hear me?
Okay. Here we go. Thank you.
So this isn't much of a question for you, Ingrid, as the other guys.
Question for me.
Yeah. Well, if the blockchain is immutable and there are no intermediaries, and that has many benefits, what about if there's a dispute or there's I mean, people talk about blockchain being unhackable, but you can still exploit people's human vulnerability. You can dupe them into making payments they didn't think they wanted to make. What comeback is there? And also, when you have smart contracts,
yes.
How can you resolve a dispute when people change their mind or want to change the terms of a smart contract? So,
yeah. Well, I love that question, and funnily enough, when I met my panelists yesterday, that was one of the very first things I asked. So why don't you share with the audience what you had to say to me?
Yes, I think it's a big problem. You cannot reverse that transaction. Once you send that money to a guy, unless you can persuade him to send it back, there's nothing you can do about it, which is kind of good from a chargeback perspective, but terrible from a consumer perspective. If you send the money to the wrong person or get duped, as you say, it's a disaster. And I think that's the biggest kind of potential barrier for mass adoption, is that you have a payment system where if you make a mistake, that's it. You buy a house, send the money to the wrong person, it's game over. And the amount of scammers in this industry is just unbelievable, because they know it's anonymous and the transactions irreversible. So I think it's a big problem, but yeah, there is nothing that can be done that I know of.
But arguably some degree of reversibility, even if that reversion is built into the blockchain and tracked along with the initial transaction, could be beneficial to take up in consumer trust and confidence.
You don't solve the
so
problem, you create a new problem. I give you cash and you say I didn't give it to you. Well, what do we do then? That's a dispute without a blockchain. These disputes happen in real life. But if you start saying we want to be able to do chargebacks on Bitcoin, for example, who decides when the chargeback's valid? Who's in charge of that decision-making process? Rather, we should actually agree upfront what the terms of the transaction are. I'm going to give you this Bitcoin because you're going to do something for me or whatever. And when that's agreed, and maybe that's encapsulated in a smart contract, then the transaction takes place.
And this was a discussion we had in the context of betting in particular, where you lay a bet and then certain scenarios may or may not play out. For example, a match gets cancelled. So the theory is, and I don't know how practical it is in terms of actual smart contracts, but you can build into a smart contract any scenario you wish, as you would in a traditional contract. So if there's a breach, if there's a force majeure, if there's an event triggering termination or whatever, and all those things can be equally programmed into
in our smart contracts for the betting, for example, the punter makes the bet, the stake is taken from his wallet and put onto the blockchain with his bets, the odds, the events, who he's betting against, who's going to result the bet. That's all encapsulated in the smart contract. The layer sees the bet, looks at all of the bits and pieces, the odds and so on, agrees that he was prepared to offer those terms, and the risk is taken from the layer into the same smart contract. So both parties' funds are now held. The agreement surrounding the bet is described in detail within the smart contract. And then the final stage, of course, is when the bet is resulted, someone wins, the money is transferred to the winner. But everything surrounding that bet is encapsulated within the smart contract. There's no room for dispute. So that doesn't say there's not going to be disputes. There can be incorrect resulting. There's lots of things that could go wrong. But if you encapsulate as much detail as you can into your agreement, there's less chance of problems.
So building on that issue of things going wrong, smart contracts, consumer adoption, and so on, from your perspectives of looking at the different sectors in which you operate, what do you consider to be the biggest barriers to adoption and proliferation of blockchain?
Well, from my perspective, what I'd say, it's really difficult right now. I don't know if any of you have actually bought Tether or any other token, for example. It's actually a painful process. So the whole user experience needs to get much simpler. The wallets need to be much simpler. They need to be very mobile oriented, user friendly, and basically the on and off ramping needs to become much better. And that's going to happen. It's happening now. We're building stuff at the moment. And the other thing we've talked about already is speed and the cost of transactions. It's early days. That'll come down. The cost will come down. The speed will go up. I don't have a problem with that.
So it's just a matter of time and reducing friction.
The internet was pretty slow in '95, I can tell you.
Indeed. David, what are your thoughts on?
Yeah, I think the same. Really, the barriers are. It's very user unfriendly. The experience today. The Apple are quite anti-cryptocurrency, so they haven't really built any functionality into the phone. So it'd be very easy for them to put the QR code reader into the phone. You scan it, sends the bitcoins. It's all transparent. But they're quite anti-cryptocurrency. So, and they're quite, they control apps that go into the app store. So at the moment, and obviously Apple's got a very large market share. It's a big barrier. The purchasing of cryptocurrency is very complicated.
So that's a slightly different point to what Adrian was saying, because Adrian was talking about the experience itself, but what you're talking about is a sort of conscious strategic approach from a significant player
Apple is Apple's the regulator.
keep their environment effectively closed to this sort of activity. So that's interesting. And Kate, how does that resonate with your experience?
I believe that if, for example, I live in London and in my area, in every small shop is already ATM, and I have my Virex wallet card, like Visa or MasterCard, issued by Visa and MasterCard, and I can just do any withdrawals from cryptocurrency into fiat. And so it's right now, and I can pay via this plastic card also in any like shop. So I suppose it's moving forward. So it will be like step by step. And a lot of people right now own a lot of cryptocurrencies like volumes, and they are ready to pay for telecom services with crypto. And so it will be, I believe, any integrated button in any marketplace website, any bank website, you can just click and you can pay from any account you have, in crypto, not in crypto. And so it's just the future. I suppose it will be like in 5 years.
Okay, 5 years and it'll be everywhere. I'm conscious we're slightly running out of time. Do we have any other questions in the audience? No? One over? No? Any questions? This is your chance to ask them anything you ever wanted to know about blockchain. Question at the back. Would you mind saying who you are and where you're from?
My name is Michael Noble, originally from telecom industry, deep into the blockchain. Just two things I would like to add is two main benefits of the blockchain that great presentation but weren't maybe mentioned is that it creates trustless trust.
Sorry, it creates
trustless trust. You can trust without actually trusting a human being.
Okay.
And blockchain, which Bitcoin started 2009, which is a proof of concept that digital scarcity can be guaranteed. Now I say two things that digest them deep because they go very deep in the potential of the application.
So trustless trust, I think we understand what you're suggesting by that, and we've explored that a bit, that whole sort of ability to rely on the transaction and how it's hardwired into the whole network. But let's talk about that second concept you mentioned, digital scarcity. Does that?
Well, that's a whole other topic in itself. I mean, it's a fantastic topic, and I love it personally. It's really the theory of money, and I'm not sure if it was.
In 2 minutes, yeah. Explain to us all digital scarcity.
Why was money based on gold 100 years ago? Because gold is hard to mine. It's scarce. Bitcoin is nothing more than gold in digital format. So basically, there's a certain number. There's 23 million Bitcoins that can ever be mined. When it hits that number, there won't be any more. And most of the tokens that are issued, or the cryptocurrency derivatives, such as ours, have limits on the number of tokens that come out. So we have 650 million. We can't have any more. It's mathematically written into the contract that we are not able to create more than 650 million. That means that if there's 1.3 billion dollars being bet, then the token prices, that is a percentage of that. Bad mathematics, you know what I'm saying? That's a really important aspect. That's why Bitcoin's $6,000 today, because more people want it than there are Bitcoins.
Thank you. Great point, and thank you for raising that. Any other points, questions? No? Okay, I have one last closing question, then we are going to wrap up. And Kate, you started answering this because you said 5 years from now, it's going to be everywhere as a means of payment. But if you look at the sort of next 5 to 10 years, on what aspect of our lives and also our jobs, considering the industry we're operating in, do you think blockchain will have an impact, if any?
I do believe it's very important and interesting aspect is smart contract economy, and everything will be like optimized. So if to consider very simple example is like self-claimed insurance, which is valid right now by French insurance group AXA Group. It's already valid, so you can apply for this and to use it. So you don't need any intermediaries. You just, if it's flight delay, you have automatically the amount on your account. It's like available via smart contract. Those smart contract economy will be like everywhere, so it will be like everyday life. So in this case, I believe it's absolutely valid and it's okay in 5 years, as well as those specific, it's the opportunity to pay via cryptocurrency anywhere. And so I know some research that by 2025, like approximately 40% of retailers will accept any cryptocurrencies and will allow. So it definitely will be.
So payments and smart contracts in all parts of our day-to-day life. David, in 2 minutes or less.
I think over the next 5 years, the change will be minimal. Over 20 years, I think it'll be seismic. That in 20 years, I would imagine everybody will have a chip in their body and they'll be interacting in some sort. Yeah, in 20 years, I'm talking. 5 years, I think minimal. 20 years, I think major seismic change.
So all our kids are going to be walking around with chips in them.
Like the internet probably took 20 years to become a mass market. Everybody walks around, everybody's connected. And I think, crypto might take the same, 20 years.
What is the internet? I mean, the internet was around for years before the web was invented. But I think that what the web did for the internet, that seismic shift where it suddenly became usable to the masses, was a paradigm shift of a similar level to what blockchain does now to where we are today. In other words, this is the next web.
So this will be as significant, if not greater, to
Absolutely.
our lives than the web. Okay,
Absolutely.
Great. All right. Well, look, thank you so much. That was a fantastic discussion. I'm sure people will have lots more to chat to you about over the next few hours, few days, depending on how long you're staying here. In the meantime, please join me in thanking our panelists in the traditional way. Thank you.